What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for perspective. This week, ChargePoint held its call for the full year earning result. The stock price responded nicely with a gain of 9.91%, closing the week at 73 cents. We are still under the $1 minimum requirement needed to maintain listing on the New York Stock Exchange, but we are moving in the right direction. Why did the stock price pop? And is now a good time to finally start buying again? I'll give you my answer to both questions. And so, in today's video, I'll go over the main takeaways from the earning call, then take a quick look at the analyst ratings, some changes here, and I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Let's start with the punchline, and it would be that ChargePoint beat the earning expectations for the quarter and delivered a performance improvement for the full year. That's massive. Expected EPS was a loss of 8 cents, and ChargePoint reported a loss of 7 cents for its earning per share, or EPS. How did they do it, right? Especially when revenue for the quarter and full year was reported to be lower year on year. Revenue was down 12% for the quarter year over year and 18% for the full year compared to last year, right? The answer to how they did it is efficiency. You can see that GAAP and non-GAAP operating expenses have consistently trended lower throughout the year. This is especially great to see, as it was one of the commitments Rick Wilmer, ChargePoint's new CEO, made when he took over, right? Another major highlight for the year is the gross margin story. It not only improved from 22% in Q1 to 30% in Q4, the full year gross margin, both GAAP and non-GAAP, was 24% and 26% respectively this year versus 6% and 8% for the same time period last year. So significant improvement in how ChargePoint is managing the business despite major headwind this year. As a business, ChargePoint landed some major partnerships and delivered some pretty innovative solutions on top of showing it can adapt to the changing environment, right? As a reminder, they partnered with GM to build a GM fast charging network, started last year, right, and will continue throughout 2025 and beyond. Also, they landed the USPS partnership. They partnered with the state of Colorado and doubled their DC fast charging infrastructure for the state. They created the industry's first cut-resistant charging cable and released the ChargePoint Protect, which is an alarm system designed to increase charging station security against vandalism. And when every auto manufacturer decided to adapt the Tesla NACS standard, ChargePoint was already ahead of the curve and upgraded all of its existing offerings to include the NACS charger cable, right? As a matter of fact, we have just installed our ChargePoint home unit, and it came with a Tesla NACS cable, right? I can tell you firsthand that the unit and the app interface are super smooth and easy to use. I probably should have done it sooner, but what held me back was the fact that I do get free charging at work. But as EV adoption grows and more people are getting EVs, it has been more challenging to get a free spot at work. Hence the move to purchasing a home unit. If you listen to the earning call, my exact reasoning for purchasing a home unit was cited by Rick Wilmer for why they believe business will continue to improve for them. The bottom line here is simply this: ChargePoint as a business is truly firing on all cylinders. It's no surprise then that they doubled down on their commitment to achieving positive non-GAAP adjusted EBITDA during a quarter in fiscal year 2026. In simple terms, they expect to achieve their first profitable quarter sometime this calendar year. And that is good news, right? Now, there's still a lot of skepticism around the stock, but we are starting to see some movement in the ratings. The overall consensus rating remains a hold. However, the recommendation is now made up of 9 ratings instead of 8 prior. The breakdown is as follows. We have 1 buy rating versus 0 before. We've maintained our 6 hold ratings, and we still have the 2 sell ratings as well. The high end of the price range has increased to $3 even versus $2 before pre-earning call. The low end has decreased to now 65 cents versus 75 cents prior, likely taking into account the recent price decline and the non-compliance notice ChargePoint was issued a couple of weeks back. The average consensus price target is also lower at $1.37 versus the $1.61 previously. This implies an 87.16% upside potential from the current level. And that is a bit hard to ignore now, which brings us to my personal thoughts on the stock and potential ahead. A couple of weeks back, I told you that I was holding off on adding more shares. My main concern then was around the potential for a reverse stock split. To my surprise, this was not discussed at all in the prepared remarks during the earnings call, nor did any analyst raise the question. This could mean one of two things. On March 5th, ChargePoint was supposed to issue a response to the New York Stock Exchange on how they intended to raise their stock price above the $1 mark, right? I haven't seen any news around their plan, but that doesn't mean that a response was not submitted. So it either means that a reverse stock split is no longer being considered, or it's no longer the primary path forward for ChargePoint. Either way, the way I see it, the earning results were positive, the full year performance was great, and the outlook for 2025 is pretty bullish on the business front. ChargePoint already committed to returning to compliance with the New York Stock Exchange, meaning that the stock price will go over the $1 level once more. And it has to stay there, right? This also means that the price target of $1.37 is more than likely reasonable to achieve within the next 6 months. This is important. And so there is still a lot of uncertainty around how exactly ChargePoint will get the price above the $1 mark, but if we can get to $1.37 without a reverse stock split, that's an easy double up from the current level. The result it posted will get more people like me off the fence. It is a pretty risky move, right? So keep that in mind. But I do believe that accumulating the ChargePoint stock at this very low price per share will pay off in the long run. And for that reason, I am a buyer and will start loading up again once the market opens on Monday. And that is my take on ChargePoint. But on that note, that is it for me today. If you found value in my content and feel so inclined, leave me a tip using the thanks button at the bottom of the screen. Remember to click the like button and share with others who you think could also benefit from it. And for my newcomers, subscribe. It's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and potentially during the week for an extra one. Till then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.